And as we've told you for months now, the chances of an interest rate cut this year, well, they're diminishing. Overnight, in the place where the rate cuts were expected first, that's the USA, the chair of its Federal Reserve, Jerome Powell, admitted that its call of 3 rate cuts this year just might not come to fruition.
So we've said at the FOMC that we'll need greater confidence that inflation is moving sustainably toward 2% before it would be appropriate to ease policy. We took that cautious approach and sought that greater confidence so as not to overreact to the string of low inflation readings that we had in the second half of last year. The recent data have clearly not given us greater confidence and instead indicate that it's likely to take longer than expected to achieve that confidence.
Is high, employment, well, that's still strong, and the economy in the US growing at 3%. So let's bring in here Deanna Mousina, Deputy Chief Economist at the AMP. Deanna, always good to chat to you. This is sort of a game changer, isn't it? Not just for the US, but also for global economies, including Australia.
Well, in some ways. I mean, of course, central banks around the world always look to what the US Federal Reserve do, both as a leading indicator for their own economy, because US inflation trends have really led Australian inflation by about 6 months or so, and also, of course, the impact that interest rate expectations have from the US to financial markets, which impacts Australia. But I think it's also important to remember that just because the US Federal Reserve moves in one way doesn't necessarily mean that the Reserve Bank blindly has to follow whatever the central bank in the US does. The RBA here has to set interest rate settings that are appropriate for Australia. And I don't necessarily think that the situation in the US is mirrored here in Australia. I think our economic conditions are quite different at the moment.
OK, so you also argue that though the conventional thinking was that the US would go first, there are other nations right now where their economies are slowing, potentially including Australia, where it could almost be the conditions that the rate cuts do ultimately come sooner.
I think that the Bank of Canada, the European Central Bank, and potentially even the Reserve Bank of New Zealand will be cutting interest rates before the Fed. We've seen commentary from the Bank of Canada and the ECB recently pretty much saying that they're likely to go before June. I think there's a good chance that the RBA goes as well before the Fed. The RBA probably wants to wait for more confirmation about that lower inflation data before it goes. But our base case at the moment is that we do see RBA interest rate cuts before the Fed.
So the only thing is, if there's resilient growth in the United States, plus its jobs market is very, very strong. We know we're seeing some jobs numbers coming out tomorrow. The previous ones were strong. You wouldn't want that trend necessarily following the United States if you are a fan of getting rate cuts this year here in Australia.
Well, if we look at all the leading indicators of the Australian jobs market, they're all pointing down. If you look at business hiring intentions, job advertisements, job ads, the number of people applying for jobs as the share of the number of jobs that are actually advertised on Seek. All of those indicators are pointing to a weakening in the jobs market here in Australia. And we've obviously seen a lot of seasonal issues going on at the ABS in terms of both the labour force data and also the retail figures, which has meant that reading the last few months has been very difficult. I mean, we saw that the unemployment rate went from its low of 3.4 to apparently 4.1% before it was then reversed back to 3.7%. So it's kind of hard to know where we stand at the moment. I think that based on all those leading indicators, the unemployment rate is still headed up from here once we get through some of these seasonal issues. So I think that the job data that we get this week will show that increase in the unemployment rate. Now, will it be enough to see the RBA start cutting at its next meeting? Probably not. The RBA will need to wait for some more data, both on inflation, retail, and the jobs data to, I think, start cutting interest rates. But I think that the Reserve Bank is a bit closer to considering those rate cuts rather than the Fed. The US consumer has been one of the strongest parts of the US economy in the past 2 years, whereas in Australia, the Australian consumer has been one of the worst parts of our economy over the same time.
So you observe this, the reason for it is even though other economies, the US included, has had more significant rate rises than what Australia has seen, the impact on households, in particular those with mortgages, has been greater here than in other parts of the world, largely because they have more fixed rate loans and longer fixed rate loans than we have here in Australia.
That's exactly right. The mortgage market works in completely different ways in Australia and the US. In the US, people fix their loans for multiple years, for 30 years or so, whereas in Australia, most households fix for a very short time, between 1 to 5 years, or they're on variable floating rates. So the impact of that monetary policy pass-through is much quicker in Australia. And we've now had institutions like the IMF come out and say that debt servicing ratios in Australia have gone up, one of the most around the world, along with Norway and Canada to a lesser extent. So we are feeling the impact of interest rates quite differently on the household sector. On other parts of the economy, there are similar impacts from higher interest rates. But in terms of that pass-through to the economy, Australian households are much more sensitive to those rate hikes. And that's exactly why we've seen the weakness in consumer disposable income, especially in real terms or in per capita terms in Australia in the past year, whereas in the US, consumer disposable income growth has been a lot stronger.
I'll tell you what, Mousina, always good to chat to you. Deputy Chief Economist at the AMP.